Ladies and gentlemen, participant International Business Information System Management Association Conference, IBIMA. My name is Kiryanto. I want to presentation my article, the title, The Impact of Corporate Social Responsibility Mediation on the Relationship Between Early Management and Tax Avoidance. Introduction. Tax avoidance has become an interesting issue in the political and academic. As Seville et al. 2015, and a global issue in multinational companies regarding tax avoidance practice. Katarzyna et al. 2018. Tax costs are one of the objects of tax avoidance. Tax costs are also a part of management opportunistic behavior in early management. Cook et al. 208. Why does management use tax expense as a medium to manage earnings? It is because tax costs are the last cost deduction in the financial statement, so that management can behave opportunistically in calculating the tax cost. It is supported by Dhaliwal et al. 204 that management use tax costs as a tool to management company profit. The receipt for Desai 203, which show that management makes tax safe to increase accounting profit. Management also carries out early management behavior through tax avoidance and tax recognition. Cook et al. 208. So, Dewi Kusumawardhani and Permatasari 2019 found that earning management positively affect to tax avoidance. And Wardani and Mursiati 29, earning management has a positive effect on tax avoidance. Meanwhile, any 29 suggested that earning management does not affect tax avoidance. So that Ramadhani et al. 2020 and Maraya and Jendrawati 2016, companies with good corporate social responsibility disclosure tend to continue to avoid tax. Previous researchers have carried out research on the effect of earning management on corporate social responsibility, including Sunase and Prodi 2017, showing that earning management does not affect disclosure of corporate social responsibility. Meanwhile, Dimas Prasetyo 2015, earning management has a significant effect on corporate social responsibility disclosure. So that Octavia 2013, Mustika et al. 2015, so that early management significantly impact social responsibility disclosure. Literature review and hypothesis development. Octavia 2013 research frame that early management positively affect corporate social responsibility. It is also supported by the study of Mustika et al. 2015, Al-Mahrok et al. 2016, Fisher and Fisher 2015, where earnings management positively affects corporate social responsibility disclosure. In other words, the company tendency to cover of earning management is one of the motives for the high disclosure of corporate social responsibility. According to several previous studies, the hypothesis can be formulated as follows. Earning management has a positive effect on corporate social responsibility. Hypothesis 2. Research conducted by Devi Kusumawardhani and Paramatasari, 2019, book Tassler and Tichef, 1995, 7, reveals that early management positively affects tax avoidance. It is in line with the research of Dharma et al. 2018, which indicate a positive influence between early management and tax avoidance. Based on some of the studies, the hypothesis is obtained early management has a positive effect on tax avoidance. Hypothesis 3. Companies with a good level of implementation corporate social responsibility will avoid tax avoidance practice. Related research in the research of Tiarawati 2015, Lannis and Carlson 2013, and Munifa Juliana Tui Sandra 2018, which found that corporate social responsibility negative affect tax avoidance. Based on the theoretical study above, the hypothesis of this research, corporate social responsibility disclosure has a negative effect on tax avoidance. Hypothesis number 4. However, this impact early management actions that are covered by using accounts for corporate social responsibility program. Amadou et al. 2016. The cost inputs for corporate social responsibility program will be the company because taxation costs will be reduced. However, high disclosure of corporate social responsibility should reduce tax avoidance, which can make the company reputation decline. So, hypothesis 4, corporate social responsibility mediation mediates the effect of early management on tax avoidance. Research design, operation definition and measurement of variable. Tax avoidance measure CAS-ATL. Corporate governance, the studies was measured by the Corporate Governance Index issued by the Indonesian Institute for Corporate Governance. Early management is measured using the Jones model. Corporate social responsibility is measured using Corporate Responsibility Disclosure Index. Regression model, technique analysis. The regression model aims to test between two or more independent variables with one dependent variable. The dependent variable in this study is tax avoidance, while the independent variables are early management and corporate social responsibility as independent variable. Results. Hypothesis number 1, reject. Hypothesis number 2, early management has a positive effect on tax avoidance, accepted. Hypothesis 3, corporate social responsibility disclosure has a negative effect on tax avoidance, accepted. So that hypothesis 4, corporate social responsibility mediate the effect of early management on tax avoidance, accepted. Based on the result, conclusion. Based on the result of hypothesis testing, it can be concluded. First, early management has an impact on tax avoidance behavior. It refers that early management behavior can accomplish through tax avoidance. Second, early management also a positive effect on corporate social responsibility disclosure behavior. The company does this to improve the company image in the eyes of the public. Third, corporate social responsibility disclosure can reduce tax avoidance behavior. It indicates that increasing the company credibility for the community will reduce tax avoidance behavior. The result of testing the study hypothesis can also prove that corporate social responsibility disclosure can mediate the effect of early management on tax avoidance. Its implication. The research can contribute to the academic side, ending insight into early management, corporate social responsibility, and tax avoidance in companies because the as corporate governance perception index participation. The government is expected to pay more attention to company report and information related to early management and corporate social responsibility disclosure to minimize tax avoidance action by companies. Limitation. The research in this study indicates that this research model can only explain corporate social responsibility and tax avoidance below 10%. Likewise, the number of samples used in this study is relatively small because it is only limited to companies registered in the JKPE participant, thus limiting the generalization of the research. Future research. Based on the limitation in this study, further research expected to use expanding the population so that it is possible to become a reference for overall research on early management and tax avoidance through corporate social responsibility disclosure. Future research is expected to use more independent variables, including company performance variable, company size, capital intensity, leverage, and so on. Therefore, it is possible to provide better research results on corporate governance and early management on tax avoidance through corporate social responsibility disclosure. Thank you for your attention.